Good morning, everyone. This is Japanese Economic Review Channel. Today, we are reviewing the extraordinary market session of June 15, 2026. It was a day that will be remembered in Japanese financial history, as indices reached unprecedented heights. Driven by a dramatic shift in global geopolitics and a wave of technological optimism, the Japanese market witnessed a massive influx of capital, signaling a potential new era for the Nikkei. Yesterday's figures were nothing short of spectacular. The Nikkei 225 surged by 3,297 points, closing at a historic 69,317.50, while the TOPIX reached 3,999.00. Both indices decisively shattered their previous records set on June 3rd. This 3,297-point jump represents the second largest single-day gain in history, trailing only the record set on May 7th earlier this year. The market's momentum was relentless, briefly touching an intraday peak of 69,682. What triggered such a massive rally? The primary driver was a sudden de-escalation of geopolitical tensions. U.S. President Trump announced via social media that a peace agreement with Iran was complete, which was later corroborated by Iranian Foreign Minister Araghchi. This peace breakthrough sparked aggressive short covering and a global buyback of equities. As expectations for Middle East normalization spiked, the upward momentum cascaded from the U.S. through Asian markets, providing a firm foundation for Japan's opening. The scale of participation yesterday was immense. The trading turnover on the prime market reached 11.46 trillion yen, with over 2.44 billion shares changing hands. This wasn't just a rally driven by a few heavyweights. It was a broad-based surge with 1,090 gainers against 434 decliners. The sheer volume suggests that institutional investors are aggressively reallocating capital back into Japanese equities as the geopolitical discount begins to fade. Looking at sector performance, we see clear strategic shifts. Air transport, led by JAL and ANA, soared on hopes of lower fuel costs and normalized international travel. Electric appliances, including giants like Advantest and Tokyo Electron, also drove the rally as part of a global risk-on move. Conversely, the peace dividend led to a sell-off in defensive and energy sectors. Mining and oil stocks like INPEX declined as crude oil price pressures eased, while consumer staples like Kirin and JT saw outflows as investors chased growth elsewhere. The positive sentiment was further bolstered by the U.S. tech scene. The successful NASDAQ listing of SpaceX, led by Elon Musk, acted as a powerful secondary catalyst. Opening at $150 against a $135 offering price, and closing at $160.95. SpaceX's debut fueled a tech fever that crossed the Pacific. This, combined with the NY Dow closing above 51,000, created a perfect storm of positive external factors for Japanese semiconductor and electronic component manufacturers. While the prime market saw a uniform surge, the growth market showed mixed performance. While certain stocks like Tabikobo and Smile HD advanced, others like Liberaware and Astroscale faced selling pressure, indicating that investors are becoming more selective with smaller caps. In conclusion, June 15th was a milestone. With the yen stabilizing around 160 to the dollar and Nikkei futures pointing even higher at 69,400, the focus now shifts to whether this peace rally can sustain its momentum in the coming weeks. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.